morning, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for July 9th, 2019. Last time we talked about technology stocks. This time we're talking financials. As we see, sometimes it helps to take a look at the broader picture, or at least to compare financial stocks, similar stocks that is, on the same chart. This is a 4-stock grid, taking a look at just randomly Goldman Sachs, Bank of America, JP Morgan, and Citigroup. Now, what's the commonalities in all these stocks? They're into resistance. They've bounced off support successfully, and they've kept the range going. So watch your trade here. Into resistance, we'll just start with Goldman Sachs. But again, the same logic will take place in all of these names. So you don't have to put a position on in all of them. If you're looking to trade something here, just take a look at your favorite stock or the one that has a better pattern for what you're looking to trade. For example, Goldman Sachs keeps this horizontal trend line at about the 208 per share level. It's been support, it's been resistance, and price is back into it. So the thought process here is just like we had this bounce, tradable bounce up away from about 185 to 206, 207. Goldman Sachs is a take profit outcome and a potential short sell outcome. We'll keep this logic the same. We actually had a trade off Bank of America, and that arrow in a prior video had discussed this play up away from 2750 up toward 2950. That trade ultimately, that arrow was there before this market happened, that ultimately finished well before the arrow was expected. So that trade low to high, or from support to resistance, or to keep the range going, was over on about July 1st. So from this point, Bank of America is a take profit and a potential short sell against 29.50, or to be precise, 30 per share. That same logic takes place in JP Morgan. Let's actually hold the conversation for JP Morgan to discuss Citigroup, because JP Morgan does not have the best pattern. Citigroup is again into resistance. We can look at how the price level performed. It's about 71.50 from earlier in 2019 and through 2018. These levels are just horizontal resistance trend lines, and they give guidance for trades. We can actually put one here at 60 per share. Citigroup is into resistance. 71.50 is the prior high from April, and again is a take profit position, and if you wish to get short into resistance. The thought process is that this range will continue, but if the range does not continue, we have stop losses in play above all of these pivots. This can be done with in-out spreads, a put spread to the downside, a put vertical spread, and just a duration 1 month, maybe 2 months at best. We're only looking for a swing down away from resistance, down toward prior targets. The one little standout in this 4-stock grid is JP Morgan, because it is not quite into its overhead resistance target, and that's roughly 117 per share. It's at the midpoint. So I like to say if a stock is in a trading range, but it's at the middle of the trading range, there is no edge. No one's winning, no one's losing, and if there is no edge, there is no trade. There's nothing to be done with a 50% chance that JP Morgan trades up to 117 per share or down to 105 per share. I would say look for some other stock, not to make a prediction, but if these stocks break through, that will be a stop loss. Or if you're going to be bullish, a bullish entry on the breakout from the trading range. That's about 30 for Bank of America, 208 for Goldman Sachs, and about 72 for Citigroup. JP Morgan, we don't want to trade this at the moment, so we'll eliminate it. And we can look at Wells Fargo, but it also is different than these other leading financial stocks. That's because, unlike the others, Wells Fargo is in a downtrend, and it continues to bounce up away from this falling trend line, move through the middle trend line, and trade up to this falling trend line, which happens to be about 48, 49 per share. So again, is there a trade here? Not really, unless you're trading intraday. For a swing position, 1 month out, a couple of weeks out, 3 weeks out, in out spread, there just isn't much there in terms of risk versus something into resistance with a potential with a potentially 20 at best move to the downside, or here, that's not that great either, a $2 move to the downside, or maybe a $6 or $5 move. That's what we're looking to do. Play off pivots, play off trend lines, especially in sideways trading ranges. And this is Wells Fargo is in a downtrend, so it would be a different strategy, would be a short sell up against resistance, but also a retracement trade strategy. We're not interested in that right now, or at least I'm not. So these are financial stocks into key levels. You can, of course, cross-check them on your bigger picture charts. For example, Goldman Sachs shows us its daily chart. It's $2.10 per share. We discussed that level as an upside target on a bounce from about 185. So that's complete. Volume's picking up, so be a little bit cautious, especially shorting into a resistance spot. But that is the strategy and the play if the range is to hold. Don't be afraid to take stops if Goldman Sachs breaks above 210 per share. Give it a little bit of wiggle room, but don't give it too much wiggle room, because a valid bullish breakout could take it up to 227 or 230. That's the concept off of a break strategy. So we can look at Citigroup, and that is a similar stock into resistance at 72 per share. We have our cone of probability of expiration, ADX, ATR, and implied volatility. Might want to see other stocks that have a little bit wider range than Citigroup, but nonetheless, the logic is the same. And generally speaking, any financial stock, if they all hold resistance, they'll all most likely trade to the downside to lower targets. But if they all start to break to the upside, that would probably correspond with the S&P above 3,000. You'll probably see them all push up and short squeeze to their prior high targets. And that's, again, the benefit of a trade strategy that isn't making prediction, but just saying the probability is for a resistance play. If it happens, we'll pick up on our account $4, $5, $6, but we're only risking $1.50 or $2 to see if that stop will be triggered and if the stock will break out as opposed to hold resistance. And that's just, again, the logic of a trade, and that's going to be true in all of these examples. We'll be carefully watching these financial stocks, especially as the Fed talks about whether they're going to lower rates soon or whether they'll keep them the same and what that might mean for the broader markets. But as always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for July 9th, 2019.